Ladies and gentlemen, welcome to Q2 FY22 Earnings Conference call of Aurobindo Pharma Limited. All participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. In order to ask a question, please click on the raise hand option on the bottom of your screen. I now hand the conference over to Mr. Arvind Bothra. Thank you, and over to you, sir.
Thank you, Aditya. Good morning and warm welcome to our second quarter FY22 earnings call. I am Arvind Bothra from the Investor Relations team of Aurobindo Pharma Limited. We hope you have received the FY22 financials and the press release that we sent out yesterday. The same is available on our website as well. With me, we have our senior management team represented by Mr. P.V. Ramprasad Reddy, Chairman Aurobindo Pharma USA, Mr. N. Govindarajan, Managing Director Aurobindo Pharma Limited, Mr. Sanjeev Dani, COO and Head of Formulations, Mr. Santhanam Subramanian, CFO, Group CFO, and Mr. Swami Iyer, CFO, Aurobindo Pharma USA. We will begin the call with summary highlights from the management, followed by an interactive Q&A session. Please note that some of the matters we will discuss today are forward-looking, including and without limitation statements relating to the implementation of strategic actions and other affirmations on our future business development and commercial performance. While these forward-looking statements exemplify our judgment and future expectations concerning the development of our business, a number of risks, uncertainties and other important factors may cause actual development and results to differ materially from our expectations. Aurobindo Pharma Limited undertakes no obligation to publicly revise any forward-looking statements to reflect future events or circumstances. And with that, I will hand over the call to Mr. Santhanam Subramanian for the highlights. Over to you, Subbu.
Thank you, Arvind. Good morning, everyone. We will discuss the results for the second quarter of fiscal year FY21-22 declared by the company. We will be discussing ex-natural numbers throughout the call. For Q2, the company registered a revenue of 5,942 crores, an increase of 4.2% quarter on quarter. Most of our businesses registered a healthy growth on a sequential basis. The EBITDA before Forex and other income declined by 8.3% year on year to rupees 1,187 crores. EBITDA margin for the quarter was at 20%. Net profit decreased by 2.1% year on year to rupees 697 crores. Increase in some of the key raw material prices and logistic costs weighed on the profitability for the quarter. Also, increase in R&D spend by about 0.4% quarter on quarter led to decrease in EBITDA margin during the quarter. We started focusing on optimizing end-to-end inventory, which has resulted in reduced capacity utilization across our facilities. This in turn increased the overhead, thereby affecting the profitability. However, this will release cash flows which will continue to benefit over the coming quarters and position us as an agile player. During the quarter itself, we were able to reduce the working capital by about $62 million, mainly due to reduction in the inventory. In terms of the business breakdown, formulation business in Q2 FY22 witnessed a growth of 5.6%. Quarter on quarter to rupees 5,161 crores and contributed around 87% of the total revenue. API business contributed around 13% and clocked a revenue of rupees 781 crores for the year, registering a degrowth of 5.8% year on year and 3.9% quarter on quarter respectively. For the quarter, the revenue from the US market increased by 6.9% year on year to rupees 2,968 crores. On a constant currency basis, US revenue increased by 7.3% year-on-year basis to $401 million. On a sequential basis, US revenues grew by 10% in US dollar terms and 10.7% on reported currency basis. We have received final approval of 7 ANDAs, 1 NDA and launched 6 products in the quarter under review. We have filed 27 ANDAs, including 5 injectables during the quarter. Revenue of Aurobindo Pharma USA, the company marketing oral products in USA, increased by 9.6% year-on-year for the quarter. On a quarter-on-quarter basis, Aurobindo Pharma USA revenues grew by 13% in reported currency. Revenue of the US injectable business increased by 5% year-on-year to $68 million for the quarter. Revenue quarter-on-quarter have increased by 10.3%. We have filed a total of 155 ANDAs as on 30th September, out of which 101 have received final approval and balance 54 are under review. The company also, as on 30th September, has filed 681 ANDAs on a cumulative basis, out of which 456 have final approval and 29 have tentative approval, including 8 ANDAs which are tentatively approved under PEPFAR, and the balance 196 ANDAs are under review. For the quarter, European formulations revenue clocked at 1,662 crores, an increase of 9.7% year-on-year. On a quarter-on-quarter basis, Euro formulations increased by 5%. On base currency, the corresponding year-on-year and quarter-on-quarter stood at 9.1% and 6.9% respectively. For the quarter, growth market witnessed a degrowth of 13.5% year-on-year to 386.3 crores. On a quarter-on-quarter, the growth market business grew by 17.3%. The quarter's performance was led by strong growth in Canada, Brazil, and other markets. For the quarter, ARV formulation business stood at rupees 145 crores, a degrowth of 71% year-on-year on a high base of last year. The corresponding degrowth in ARV formulation on a quarter-on-quarter basis was 51.1%. R&D expenditure is rupees 399 crores during the quarter, which is 6.7% of the revenue compared to 6.3% in Q1 FY22. Net organic capex for the quarter is at $98 million. The average FX rate was 73.94 in September 21 and rupees 73.68 in June 21. Net cash including investments at the end of September 21 was $34.7 million. The average finance cost is at 0.6%, mainly due to availing multiple currency rules. The board of directors constituted a committee of independent directors for comprehensive evaluation of various alternatives stroke options, including demerger, for restructuring of company's wholly owned subsidiary AUROPHARMA Specialties Limited, focused on sterile oncology and hormonal products, and recommended to the board by the ensuing meeting for further discussion and decision. This is all from our end, and we are happy to take your questions now. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may use the raise hand icon on the bottom of your screen. Once your name has been announced, you will be unmuted and you can ask the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Damayanti Kerai.
Hello, am I audible?
Yes.
Okay. Thank you for the opportunity. So my first question is on succession plan for Govind. So as per your earlier update, he'll be stepping down. So what are plans for his replacement?
The board is meeting again in the early December, and we will let you know after that board meeting the final succession plan in this.
So we'll get update in December after your board meeting,
yes,
right?
Yes, please.
Okay, thank you. And my second question is on your US performance. Very good performance, I'll say, compared to what we are seeing in terms of price erosion and all. So what has led to this notable performance in the base business? Because I see like injectable is also picked up, but more of the growth is driven by the oral part. So what kind of price erosion you are facing in your portfolio, and how do you see this moving ahead?
This is Soumya here. I work as a CFO for Aurobindo USA. Thank you for the question, Damayanti. The US business has grown largely with the oral solids registering significant progress in terms of volume However, like you said, there has been price erosion, and we have had fairly good growth across all the therapeutic segments. It's on the back of certain shortfall in demand in the previous quarters. This quarter has been good, and we are looking forward to similar growth going forward. However, as you mentioned, pricing pressure was there during the quarter. We expect that this would stabilize over a period of next 1-2 quarters.
Okay, so right now erosion must be in double digit, right? Which you expect to moderate.
So no, I didn't say moderate.
High single digit is the present one, and we don't know what we are going on next 1 or 2 quarters. We'll have more clarity on this. This is not only once the price falls are there, and automatically the stock adjustments also will be there. It is a double effect will happen.
Okay, sir. Thank you. That's very helpful. And my last question will be on your plans for Eugia. So, what kind of alternatives you are assessing, and when do you expect this process to complete?
I think as already Subbu had explained, Damayanti, I think the subcommittee of the board has been already formed with independent directors, and they will be evaluating everything, and they'll be getting back in the forthcoming meeting. So I would not like to at this juncture second guess anything, Damayanti.
Okay, thank you. And Govind, all the best.
Thank you.
Yeah.
Thank you, Damayanti.
Thank you. Yeah.
Thank you. Next question is from Tarang Agarwal.
Hello, sir. Good morning. Couple of questions from me. Firstly, on the injectables business, at about $68 million, it's still about 15% behind the 77 million run rate, which we reached pre-COVID. What's driving this, and how should we see this moving forward? I ask this because, you've had about 23 approvals in the trailing 12 months. And still the current run rate is not close to pre-COVID levels. So how should I see this moving forward?
Swami, I'll take this. I think if you remember, we have clearly said that we are confident about our medium-term aspirations of reaching the 650 to 700 million revenues by FY24. So obviously this will be backed by our pipeline and continued efforts to improve our market share. What I would suggest is, Tarang, not to measure it on a quarter-to-quarter basis. On an annualized basis, if you go through this particular period, definitely we are confident about achieving whatever we had already mentioned.
Got it. Thank you. There's a line item in the cash flow which talks about amount paid for business acquisitions to the extent of INR 5925 million. What would this be regarding? Because if I recall, your OTC brands and ANDA acquisition was for about $104 million in last quarter.
Subbu?
That's true. Yeah, I unmuted. That's true, Tarang. We have last quarter we have paid around 104 million, which you rightly said. Plus also this quarter also we paid something around 17 million, which has been explained in the earnings call presentation. So that is the total we have paid during this year.
So, but $104 million will translate about 750 crores.
Yeah.
So there's still a difference.
No, there are certain things.
Nutraceutical brands as well as the ANDAs and some other smaller assets, and 3 different types of entries are happened. For all these things is 82 plus another 17 and another 22.5. These 3 entries are happened in the overall in this last 2 quarters.
Got it. So that'll be captured in acquisitions plus payment for intangibles, correct?
Yeah, right.
Yeah, and it will be in the balance sheet. Something will be reflected in the net block. Something will be reflected in the capital WAP, and something will be in the capital advances. You will not be able to reconcile directly.
Got it. And the last one from my side, if you could give us some sense on, what's driving this heightened pricing pressure in North America, because we've seen it across your domestic peers as well as global peers. And while you've mentioned that it had to do with channel filling last year, is that the only reason, or there's incremental supply and competition that's suddenly come in?
Okay, Swami, I'll take it, Swami. So basically, Tarang, it's a cascading effect. I think it started with that, and then so obviously, like I think what we had mentioned about is the stocking because of the more demand during the COVID period. So that particular, when we are talking about stocking, is across the entire value chain. It starts from the pharmacist to the distributor to the manufacturer. As you would appreciate the fact that they have to sell the product within a certain shelf life, because anything less than 1 year, I think the distributor would not buy it and sell it in the pharmacist level. So obviously, there is a heightened pressure in terms of everybody trying to liquidate. And that is the predominant reason. And it also has a cascading effect, because when people are not able to sell it, they would like to go much lower in terms of the pricing to ensure that they derive some value rather than destroying the product. So that is the main reason we clearly say. But we have used this opportunity to relook at our end-to-end inventory. And as Subbu has mentioned in the opening call itself, we have already improved to the extent of 62 million. And we would like to continue our effort for another quarter or two minimum, like to ensure that we are able to further improve, Tarang.
Okay. Thank you. Thank you and all the best.
Thank you, Tarang.
Thank you. Next question is from Anubhav Agarwal.
Yeah, hi. Just one clarity on the US business. So is this a new base that on which we should only grow from here, in the sense that there are multiple tailwinds for us? Injectables are yet to normalize, cyclophosphamide yet to contribute, yet to get full contribution from several ANDAs. So this $400 million, can you, I know difficult to say, but what's your confidence level? Is this a new base for us?
I think I would
maybe.
Go ahead, sir. Go ahead, sir.
Maybe this may be, we cannot tell this is the base, but we want to see one more quarter as a safe side. So then we can tell where is the base in this whole thing. And as you told, the price erosion and self-stock adjustment, both in orals and ARV, and ARV side also, a lot of stocks are piled up in various levels, and injectable tapenem or something. So there is a lot of things that happened last 1 or 2 quarters, other than the expenses increased by the utility expense like coal, or other than the raw material and whatnot. Everything came in 1 or 2 quarters.
No, I appreciate that. My question was only on the US.
Yes, we can tell you after 1 quarter.
Yeah, Anubhav, I'll put it this way, just to add to whatever Mr. Reddy said. I think as he clearly explained, I think to add to your point that injectable and other divisions would start, like I think you can consider that as a base. But then for oral, as Mr. Reddy rightly said, we may need to wait for another 1 or 2 quarters to see whether this is the bottom or it would even go down a bit more. So that is the reason we are trying to be cautious, Anubhav.
And that cautious outlook is coming because you still think that there is a lot of inventory left with other players. They still want to liquidate it.
As you would appreciate, Anubhav, it would be extremely difficult to judge how much who's holding and how long they would like to, take to liquidate, as you would appreciate, because it won't be more than at least a couple of quarters is what our assumption.
Definitely we are the near end, Govind. Near end. That's what we are telling, one quarter more.
1 quarter, I think, yeah. 1 quarter or maximum another, instead of 3 months, it could be 4 or 4.5 months. I think
not more than, because the product expiry generally 24, average you take it 24 to 30 months. So it's already started from 20th 2020 June or sometime, and it ending now in next 1.5 quarter. Okay. And afterwards the product can never be sold if it is less than 9 months or so.
Okay, that's helpful. Second, what was the global injectable sales in this quarter across all geographies?
So global injectable sales during the quarter is around $105 million.
And can you detail some plan on the China? Because I think at the start of this calendar year, you talked about getting 8-10 approvals. But how many approvals have you got, and what is the total filings you have made in China so far?
Now we have filed around 28 products, and 2 products are approved. And we launched to 1 product we got out of 2, 1 we got the bid in the tender bid. And another one is a retail product, and we are expecting another 5-6 products approval in next 3 to 6 months, 3 to 4 months.
But sir, wasn't this the same status that we filed 28 ANDAs at the start of this calendar year itself? So we haven't made any incremental filing in China so far.
No, the ultimate filing from India and then goes to China office and China filing. Maybe last call it may not be 28. Now how much, Subbu? Correct exact number? China filing?
Arvind, you have the number, Arvind?
I'll reach out to you, Anubhav.
I think we have filed in this quarter around 3-4 products. And this is all filings are happened from Aurobindo India, and we started our production in the new plant in China plant, and one product we have taken exhibits, and we are taking every month 2 products from early next year onwards.
Around 30 products, Anubhav.
Yeah.
Okay, sure. And just the last clarity on this ARV contract. So when is the next contract negotiation due for TLD for us? I think it was a 3-year contract for us. When is that coming for next renegotiation?
You're specifically talking about probably South Africa. So that already, like, I think they have asked for the bid and we have given the bid also. Like, it might take another 6 months for us to finalize that, I would say. And the procurement will start 9 months from now or so. That is as well South Africa. But other agencies will keep continuing to ask for the bid whenever I think they liquidate their stock, Anubhav.
What is the sense you're getting? Is this getting more competitive now? More players have come in the TLD market? Because
more than the number of players, Anubhav. See, one thing we have to remember is whenever people come under pressure and when they reduce the price, and the price are not likely to immediately improve, I think that would become the new base. So it's not more because of the new players entering it is more because of the stock people are having, which they are trying to liquidate in terms of going aggressive on the pricing. So that is a challenge.
Okay. Thank you, guys.
Thanks.
Thank you. In order to ask a question, please click on the raise hand option on the bottom of your screen. Next question is from Prakash Agarwal.
Yeah, am I audible?
Yes.
Yeah, hi, good morning. My first question is a little clarification. Just wanted to understand, the sales of that OTC basket that we bought. Has that also been clocked in? I missed that comment.
Yes, please.
And how much would be the contribution, sir?
I think Subbu mentioned 9 million.
Yeah.
Okay, sorry. Thank you
Total
for the
this year run rate for 11 months is approximately 35 to 38 million.
Okay, that is helpful. Thank you. And the second question is on the, the receivables which have gone up. Just trying to understand, you also mentioned there would be a self-stock adjustment. So how do we see the receivables unwinding, or have we pushed enough sales given the pricing pressure was there, but still, we've done good sales number. How should we see this receivables unwinding?
Prakash, the receivables during the quarter has not gone up. Actually, overall, if you really see, the receivables has come down by about $5 million, right? And maybe regarding the question, how you see it for future, Swami can explain.
What is that?
How the receivables going to look in this scenario? That's what he was asking.
More or less same, Subbu.
More, yeah.
So I can see receivables have gone up by 20% over the last 6 months.
No, you compare between June to September. June to September, it has come down. March was the lowest actually. We have explained in the last quarter itself, there was an increase in the trade receivable by about 68 million. Last quarter we explained it, and that's what the overall working capital has gone up. Last quarter by 86 million. But this quarter, conscious attempts have been made by the company in all fronts, both the inventory and trade receivables, and it has been reduced actually. Between June to September, there is a reduction in the receivables.
And you are saying this is the base, unlikely to see a increase from
to see a major change unless the sales is increasing, more than the normal.
Perfect. And lastly, on the margin outlook front, definitely, as Mr. Reddy also mentioned, there has been significant cost pressures. solvent prices and power and all those things have gone up. How do we see our gross margins and EBITDA margins for the next 12 to 24 months, given that, the portfolio, as one of the participants said, there is enough headroom for growth in terms of US sales increasing share?
The costs will come back to, we are hoping to normalcy, like coal or like solvent prices, everything after the Winter Olympics. Then we are hoping in the first quarter, last quarter, January to March quarter end or so. Costs, we are assuming it will come near to the normal. And as far as the one more quarter is as we told, we want to see that. Then we want to see where we stand in the pricing pressure, and we are not expecting much big fall side. We want to test it. Where is the base? This quarter is the base. Next quarter is the base.
Understood. So follow up is on the operating cost front. So we have seen significant cost savings and cost optimization. How much headroom we have, given the fact that, the raw material cost is still increasing. I mean, September was the first month probably companies saw a significant rise, and now we're going to see the full quarter. But I'm saying, what is the cushion we have on the operating cost side, which we have demonstrated very well in the last quarter? I mean, is there further scope for cost savings?
Yeah, we are working across the company in various models are working very effectively. This is the time we have to save the next 1 or 2 quarters. Then we can maintain the cost neutral.
Okay, perfect. And what is the capex guidance, sir, for the next 2 years, this year and next year?
Subbu, you want to tell?
Yeah, Prakash, we have incurred a capex of around on the normal capex, we incurred around 122 million in the off year and 60 million in the current quarter, right? And as has been said, this year we'll expect it to do around 200 million against this, because we have 80 million left over, and we will try to control the capex within this. Apart from that, we have 2 other capex, which is the acquisition of ANDAs and the brands, which is over and above M&A acquisition cost, and the PLI project. As and when we take off, this will get this also will get incurred.
No more new capex in the next 2 years.
Next 2 years,
No more, almost negligible, zero capex other than already approved and ongoing projects. So
which is about, okay, which we have mentioned in the past, about $200 million per year, right?
Yeah.
Okay, so thank you.
Yes.
Okay, so thank you so much and all the best.
Thank you. Next question is from Shyam Srinivasan.
Morning, and thank you for taking my question. First one is on R&D. It's gone up this quarter, and I also see quite a lot of filings, about 27 filings, at least in the US. So, what are we filing? The frequency has picked up, so which is what I'm trying to understand. And did it get bunched up, or have we moved to a different level of R&D filings?
I think we are still maintaining the same level of filing what we are committed earlier. Like I think around 40 to 50 filings per year. Like I think sometimes you cannot measure it on a quarter-to-quarter basis.
Got it. Govind, just the quality of the filings as well. I know I can see 5 injectables, but if you could share any color on, or is it the regular stuff that we've been updating us on the different kind of filings we have?
No, I think as we move forward, it would be more skewed towards complex over a period. I mean, our injectable and complex would be like more as we move forward. Like currently, like I think I would say, as you rightly said, around 20% is 22% is like more in terms of injectable. But as we move forward, like I think it will be more skewed towards complex in the future.
Got it. The second question is just on capital allocation. We have paid a dividend this quarter. Just want to understand how should we look at capital allocation. What are some of the priorities that we have? We are a little bit net cash, but maybe we'll generate more cash. You made the comments around capex. There is no incremental capex other than what's going on. So how should we look at capital allocation?
No, I think the capital allocation has already been, as we had defined in the past also. Our objective is not, we are not looking for any large ticket acquisition, and our acquisition strategy is revolving around the two bullets what we had always maintained. One is in terms of like market penetration, and the second is in terms of any new platforms or any new set of products or ANDAs or any. We will also be looking at some in-licensing opportunity in agrotech as well. So these are something which are very clearly defined, but obviously we are not looking at any large ticket acquisition at all. And as you would appreciate, like I think over the last decade we have grown our top line by 8x and have consistently generated cash flows. However, in the past, like the cash was utilized to service the debt, and now that the debt has been completely removed, and then like we are generating cash. Our objective is to look at like I think committing more payout to the shareholders in the future. I think that is something which will be articulated by the board as well.
Yeah, is right.
Got it. Last question from my end is, Govind, any update on the PLI? What our capex status there? Any update in when is the earliest commercialization possible? If you could share something. Thank you.
As far as the PLI one is concerned, Shyam, so the discussions have been initiated with the government, and they are also looking at various options, and we are in discussion. We will have clarity in the next, probably like in the next few weeks or before the end of the year, is what I would say, Shyam. Because our objective is before we start investing major capex, we wanted to ensure complete clarity. That's what we are discussing. So another 4 to 6 weeks, we should have complete clarity, or maximum by year end.
Okay.
Then
So
we'll talk specifically about the capex.
Got it. Thank you and all the best.
Thank you, Shyam.
Thank you. Next question is from Neha Manpuria.
Yeah, thanks for taking my question. If you could just update us on one, the biosimilar pipeline in terms of filing status for Europe, and second, on the complex injectables, particularly the long-acting injectables.
Okay, so shall I take it, sir? Or?
Yeah. Okay. Tell me.
At this stage, we have concluded a successful licensure clinical trial for our second oncology biosimilar, and we are in the process of engaging with EMA and for filing the product in this financial year itself. We are also having 3 more biosimilars at different stages in licensure clinical trials, out of which a monoclonal antibody that is currently being evaluated in a large phase 3 efficacy and safety trial, which would be potentially filed by next financial year. Our development efforts with our second wave of biosimilars are also entering into an important stage, with one product advancing into phase 1 clinical trials in the last quarter of the current financial year, and also another in next financial year. So, and as you might be aware of it, like already one product has been filed with EMA. So that is the status, Neha. On the complex injectables, particularly on depot injection, I think by next year we should be at least filing 1 or 2 products.
Thank you, sir.
The clinical trial is going on in the complex injectable. Just started the clinical side.
Thank you, sir.
Thank you. Next question is from Nitin Agarwal.
Hi, thanks for taking the question. Govind, just taking forward on the PLI scheme that you mentioned now, with this delay which is there versus what was the earlier expectation, how does it change the arrangement for us for the incentive structure and everything?
Nitin, I presume your question is on PLI?
Yes.
Yeah, so I presume, okay, let me just answer it. What I understand from your question is, like I think since there is a shift in terms of the timeline, would your overall scheme also would get shifted? Is that the question, Nitin, if I understood it right?
Yes. I mean, how does it impact our economics in this whole thing now?
Yeah, so I think that is also another point of discussion which is being considered by the government, Nitin, at this juncture.
Okay.
As you would appreciate, we need complete clarity to start the project, and that is also part of the discussion which is ongoing.
And I guess just to sort of rewind, whenever from the time you start the capex on this project, it will be what, 18 to 24 month construction period, or what kind of construction period do you foresee on this?
Yeah, it would be 18 to 24 months is for sure minimum, Nitin. Again, what is more important is, like I think for the scheme as well as for us is also the starting date is important of having clarity and committing ourselves for the larger capex.
You have a vaccine portfolio.
Nitin, your voice is not clear, Nitin.
Is this better?
Far better, Nitin.
Yeah, sure. Thanks. Sorry for that. On the vaccine portfolio, both on the bacterial and on the viral side, can you just give us an update on where we are on both the streams?
On the bacterial, as you might be aware of it, like I think our pneumococcal is in the phase 3, and we expect to launch it in India at least by Q3 next financial year. And obviously, we will start with India because after that, after 6 months only, we can pursue the approval for the WHO, which can also push us into the UNICEF. That is as far as pneumococcal is concerned. There are 1 or 2 products additionally being pursued on the bacterial. On the viral, unfortunately, like there are no major changes in the scenario in terms of the vaccinatory product, and so obviously currently this facility would wait for the Auro vaccine product to get into that particular facility over the next 3 years or so. Till then, it will be running more of clinical batches supporting the Auro vaccine need.
And second, just to follow up on the bacterial vaccine, you talked about launch in India in the second half of next year. So this is going to be what we expect it to be a part of the government immunization program by the second half of next year.
No, it all depends on like I think what scheme is open by then, Nitin. Because if they had called it earlier than that time, then we may not be able to participate in that. But I mean, we will still participate, but they will not clear it until another the approval comes, right, Nitin?
Right. And the WHO opportunity, you said you can apply after 6 months. So when does it start to become relevant for us from a export opportunity perspective for this product?
From the subsequent year onwards, Nitin. Because in the interim, like the facility also has to be inspected by WHO for them to get this product qualified in their listing as well.
And if we can squeeze in a last one on on the acquisitions that we've done on ANDAs and brands this year, we spent almost $125 million. So 2 things. One is, what is the thought process behind committing such large investment behind these products? And 2, what kind of payback or opportunity that do we see in this portfolio that we've acquired?
Swami?
Sure. Thanks, Nitin, for the question. One is there's a nutraceutical opportunity that I think Subbu had explained and Mr. Reddy had also mentioned. It's on the nutraceutical space. We are fairly bullish on that, especially this is a branded nutraceutical. That's a major acquisition, dollar-wise. And then the others are, we also mentioned that we are looking for ANDAs, not for any big-time acquisitions. So these are ANDAs where we do not have and we wanted to add to our portfolio. So as far as the payback is concerned, I would only say that they are good, and we expect, because we are yet to launch some of these products. They are discontinued. Some of them are discontinued ANDAs that we hope to launch. So we would get a better feel over the next few months. But we believe that we have reasons to be very optimistic about it. Yeah.
And so in this nutraceutical portfolio, the $35-38 million run rate that we talked about for the business.
That's correct.
And it is captured in the orals business.
In the oral, Subbu, you should explain where you captured.
Yes, X of injectables business in US, Nitin, you should take that.
Okay, sure. Okay. Thank you.
Thank you. Next question is from Surya Patra.
Surya, you have to unmute.
Please unmute yourself and ask your question. Okay, next question is from Naga Sridhar. Please unmute yourself. We request you to please raise your hand from the bottom of your screen to ask a question.
Hello? Yeah, I'm Sridhar here. Good morning.
Yeah.
I just want to get an update on your plans for COVID portfolio, please, including vaccine.
I think, Mr. Nagasridhar, we have already explained about the vaccine. Unfortunately,
I just joined late. I couldn't hear it properly.
no
Sorry for
problem.
that.
I'll repeat it. As a vaccinatory product did not go as planned, and obviously, I think they did not get the approval with the TFDA, which they didn't move forward. So that is where we stand as far as vaccine is concerned. Even though we are pretty open in case if any opportunity accrues in terms of contract manufacturing, that is on the vaccine. As far as oral portfolio, I think as you might be aware that we had in-licensed molnupiravir from Merck, and we have recently seen that certain MHRA approval has happened, which facilitates us to export certain quantity of product, and we have to wait on domestic market based on DCGA's approval. So either whether DCGA would consider based on MHRA, or as far as US approval is concerned, the SEC meeting is scheduled on November 30th. And we are pretty much ramped up ourselves in terms of the potential opportunity. We already made certain quantum of product, and we are also keeping ourselves ready in case if the demand picks up.
That's fine. Just one more question, Mr. Varun. This is with reference to this PLA scheme. Do you think it has been delayed more than what it should have been? Do you think it should have been already launched? The timeline should have been much faster from the government and the industry?
So as far as the scheme was concerned, as per the scheme itself, March 23 end is when I think the facility was supposed to be commissioned. And as you would appreciate, Nagasridhar, the scale of these projects are much larger, where it is very, very important for both the industry as well as the government to ensure that every aspect is cleared and concluded before you commit yourself for a large-scale investment. So that typically some time has to be assigned. I agree with you, it could have been done faster, but this is where we stand, and we are fairly confident this will get concluded in the near future, and we'll move forward with this, Nagasridhar.
Thank you, Mr. Varun. Thank you.
Thank you. Next question is from Abhishek Kapoor. Please unmute yourself and ask your question.
Hello.
Yes, you can ask.
Good morning, everyone. Sir, I appreciate the management's bandwidth on giving clarity with respect to various questions. The only one point I would like to make here is that last quarter we made some announcement with respect to veterinary API or some company's acquisition. After that, share price collapsed, and it has not recovered. And second point is pledging, depledging is happening very quickly, and market is not liking, I believe. So can we think about some buyback once our capex is done?
Abhishek, this will be considered by the board is a simple answer I would give you at this juncture, Abhishek. So as we had mentioned earlier that we would consider all options in terms of improving the overall aspects, including shareholders' wealth. I think definitely the board would consider at an appropriate time.
Thank you, sir.
Thank you. Next question is from Deepak Gupta. Please unmute yourself and ask your question. Okay. Next question. Okay, Deepak Gupta, yeah.
Mr. Gupta, are you able to hear us?
Okay, we'll go ahead. Next question is from Vishal Manchanda.
Thanks for the opportunity. Sir, my question is with respect to the injectable guidance, $650 to $700 million. So just wanted to understand if you are also incorporating the upside from biosimilars and vaccine into this injectable sales guidance, and whether this is a guidance for the global sales number?
It is for the global sales number. As far as biosimilar and vaccine is concerned, they are not included in this as such. There can be always certain marketing arrangements, but the upside will be lying with the individual businesses.
Okay. And second, on the ARV sales, so is this was this quarter kind of the base and it should move up from where it is, or there is scope for this to further go down?
I think Mr. Reddy has clearly articulated even for ARV. I think we need to wait for another couple of quarters, Vishal, because we don't want to assume that it has bottomed out. And the consumption in the ARV has not come down at the consumer level. It is more in terms of the last mile connectivity, and also because due to COVID, because of it, most of the agencies are holding stock. Once that gets liquidated, right now what is happening is small tender also people are extremely aggressive in terms of reducing the price because they want to liquidate their stock. I think we need to wait for those particular inventory to get completely liquidated. After that, the stability would come. But even though the stability in consumption would happen, the prices would be a bit more lower. The prices will be lower compared to the past, because once the prices have been lowered, it would take some time for it to come up.
Okay. Thank you. That is helpful.
Thank you. Once your name has been announced, we request you to please, before asking your question, please mention your company name and then ask your question. Next question is from Anubhav Agarwal.
Hi, this is Anubhav from Credit Suisse. One question on the respiratory filings. Govind, I think you guys have made one filing so far. Can you update when are you expecting the next filing on both MDI and the DPI side?
DPI work is going on, and that is with the alliance with some other company. One DPI product only we are working. Second one we are working with some other partner. DPIs we are not developing on our own, and what we are developing is MDI. Second MDI we are hoping in the first quarter of the next financial year. We are hoping if our PK study and clinical study is just started in that, if that completes, then we can file it second product. First product one, we have the queries raised by FDA. We have answered 2 weeks back, and we hope that the inspection will happen in next one or 2 months. Then maybe approval next year.
And totally 6 MDAs are being developed, just to add to what Mr. Reddy said. So totally 6 plus 2, 8. One has been filed and 7. Yeah, 6 MDAs and 2 DPAs. One has been already filed. Yeah.
2 DPAs is on a partner agreement.
And out of the 6 MDIs, let's say where one we have filed, out of the remaining 5, Mr. Reddy talked about potentially filing one in Q1 next year.
Yes.
But how about remaining 4? Do we expect any more filing of MDI next year?
Next year, yeah, that is maybe end of next year. Third one can be filed. That is the 3 we have clarity, and then let us file this other 2. Then we will let you know the other products.
Sure. And just getting some clarity on the PLI thing. What is the kind of clarity that you are seeking from the government? Is it more that the contours of the scheme, I think, were very clear. That I think is the clarity more the incentive structure, or is the clarity that you want to do a certain capex? Is that you want to do more brownfield capex? Does that qualify under the government scheme? So can you talk about what are the points you're looking clarity on?
Yeah, Anubhav, I'll make it very simple. When PenG originally, when the draft scheme was there, it was supposed to be PenG and 6 APA. In the final scheme, it was only PenG. We wanted to also manufacture 6 APA, because the 15,000 tons of PenG, when we had committed ourselves, I think we were very clear that majority of that would be converted into 6 APA. And so the process, which in fact originally Aurobindo developed, where we don't need to isolate PenG to manufacture 6 APA. But since the scheme is only for PenG, I think we were raising the query in terms of without isolating the PenG, whether it can be considered as part of the scheme. Otherwise, we'll be unnecessarily losing certain yields as well as commensurate cost. I think that is the reason. That is as far as 6 APA and in terms of in PenG scheme as well. And also in 7-ACA, there has been shift in terms of certain cephalosporins moving into D7-ACA as a starting material. So these are the major queries. And obviously also related timeline is something which we had been raising about. So these are some major topics in terms of the discussion.
Yeah.
Okay, that's helpful. And last question is on the new facility that we were making for the injectable business in Vizag. So in your guidance, when you talk about $650 to $700 million, do you expect, and you guys have talked about this facility coming online around June next year. So does that June timeline assumes it to be cleared by the European regulators, or does this June timeline only talks about facilities
No,
starting?
no, facility starting, and the end of next year, the inspections will be completed. That is what we are hoping in next financial year.
So the kind of delta that we're assuming in the injectable sales with just in so effectively it will be first year of operation fiscal 24 for that
Yeah,
facility.
right. Yeah, from January 23 onwards.
So are we confident of that $615 million number, because we need to generate the $250 million incremental delta from in almost like 2 to 2.5 years from now?
We have you guys, our US plant we are already filing, and we have 59 products in the filed and under approval, and various other good products are there, and we are really confident to achieve this figure.
No, actually, US, I don't have a problem. I was talking more about the ex-US injectable delta that we were expecting, that if anything happens to the facility, let's say, for example, it doesn't get approved in time. I'm just
At
talking about.
present, we are using the existing facilities at present, Unit 4, but what we plan for that is in future, all products approves in US facility, then we may not allocate the space for the Europe and emerging market. At present, we are using the existing Unit 4 bigger facility something. But we want this plan to only from 23. That is what we are envisaged, and from there onwards we will demand we can push to that other plant.
No, I agree with that. That's what I was asking. That let's say if the approval gets delayed for the from the European regulators for this facility, does this mean that our target of $650-700 million gets pushed out by a year? Because that's always possible.
We have a lot of clarity. There is no connection to the Europe and emerging markets. We have never calculated next to 2 years one. We have not calculated the Europe sale in that.
Can I add one point? There is oncology filings which are happening in Europe, and also the PANM block is also being expanded, which is not fully utilized for Europe. So these two will be additional inputs for injectable business in Europe and an emerging market.
Thank you.
Thank you. Next question is from Surya Patra.
Yeah, thank you, sir. Thank you for giving this opportunity. Just on the again the PLI side, sir, wanted to have a sense. Obviously we are in discussion with government to get some more clarity and all that. But is it? Do you have any sense, even after getting clarity and all that, what would be the cost difference that we can have compared to the Chinese competitors for this project? Whether it would be a kind of considering the incentive, it would be a kind of superior one compared to the Chinese potential competition, or what is our thought process there, sir?
We're putting so big a plant, as Govind will explain in detail. When we put so big plant, we have done very good homework in this direction on these products. And Govind, you can continue.
I think obviously, Surya, like we are going ahead with a clear consideration that we would be competitive. So that's a consideration with which we are going ahead. And Surya, you have to remember one important aspect of it. I think Aurobindo has been one of the pioneers in terms of the Pendi 6-APA, like I think even setting up a plant in China. So obviously there is enough experience, and as Mr. Reddy explained, like there is a deep level of like I think considerations or design aspects, everything has been looked at, and particularly having a facility in a hot zone, like I think so obviously like a lot of consideration and really a lot of work has gone in, and we're fairly confident that we'll be able to produce a product competitively.
Sure. Second question on the European business, sir. In fact, obviously the expectation was to introduce more and more injectables in the Europe side, and also add the PANM products in the European market. So, what is the progress there? And now, what is the profitability that we have, or in terms of margins, what level of margins that we have reached for the overall European business? And in 3 years' times, let's say, sir, what is the kind of expansion in the margin overall that we are anticipating for the European operation as a whole?
Yeah, Surya, I will answer. Sanjeev Dani here. First of all, am I audible?
Yeah.
Yeah. we would be, touching in a low teens in terms of EBITDA, including Apotek's loss-making business, which has turned around. Going forward, we are adding more specialty products. As you know, in oncology, Eugia product, we have developing 55 products, and out of that, 12 are already filed, and 9 are launched, and another 3 will be launched in the next quarter. Then you also talked about Vizag facility, which will be ready civil work by June next year, and then after that we'll go for approval by year end next. There are 50 Vizag general injectables being developed, and out of that 12 are already approved from Unit 4, which is Eugia 3. So as soon as the US supplies are taken care ex-US, we will be able to commercialize that also immediately. And then the Penem block is being expanded. Right now, we are not able to fully supply Meropenem, and we are buying from third party.
No need of products, Sanjay.
Okay. And then, of course, there are another unutilized capacity which will be supplying to Europe from Penem block. And cephalosporins are also being reactivated, and there is a lot of scope for higher strength of cephalosporin. So these are the 3 injectables that we are, 3 areas of injectable that we are looking to add the margins. And then you heard about biosimilars. We have already filed one, and another is being filed in November. So I think this is the overall specialty basket which are there. And we are also adding the day one products in terms of the oral. There are 200 products which are being developed, and there are a number of them are in day one. So overall, we think that we will be improving the margins going forward, even though I would not like to give the guidance on this part.
Sure. Just last question on the Revlimid side. Can you give some sense what is your interaction with the innovator? Are you expecting to settle the litigation and get a...
we already settled the litigation, and we are also launching from 23 onwards. Some percentage of market share.
Sure, sir. Okay, great. Thank you, sir.
Thank you. We will take last 2 questions. Next question is from Paresh Jain. Please unmute yourself.
No, my questions have been answered. Thanks.
Okay. Thank you. Next question is from Mr. Venkat Gugnini. Yes, please go ahead. Ask your question. Mr. Venkat? Okay, we will take one last question from Mr. Nitin Agarwal.
Hi, sir. Thanks for the follow-up. Just following up on the the question around nutraceuticals, just if you can help us understand. See, we already sold off the Natrol business. So how different is this opportunity versus the business that you're doing with Natrol?
This is branded business for a start. That way it is different. Whereas Natrol was not, it was more like an umbrella brand. This is specific brands. That's one. And then there are products which are 1 or 2 products are common, but there are different products too, like the cold segment is different here. And then this is more on the cold segment, sleep segment. So that is what I would say.
So this business is going to be basically built around the products that you acquired, or we'll be adding meaningfully.
No, we are adding some more products, but it was started with the products we acquired. It is a running business, but we acquired the products and we are launched the same products, as we also got some stocks also. So we launched the business along. It's a continuity of business, but we have not bought the business. We bought the brands.
Okay. And last one, Govind, if you can just give us any updates which are there on the regulatory inspections for us on the plants which are under warning letter.
Yeah, the only change is Unit 1 got inspected and we have responded within the stipulated time. We are awaiting further inputs from the regulator. That is as far as Unit 1. The Auro Life inspection is ongoing. FDA inspection is ongoing. These are the only two changes compared to what we have presented earlier, Nitin.
Auro Life is ongoing currently, you meant?
Yes.
Okay. And that is the Penems plant for us, right?
No.
So that's a Unit 4 plant.
No, there's a America plant.
US
America
plant,
Dayton
US plant, Nitin.
Okay. So unit, the Auro Life plant in the US injectable is getting inspected right now.
No.
Oral.
Oral
Okay,
already warning letter is there to that plant, and that plant is getting inspected.
Okay, got it. My mistake. Thank you. Thanks for clarification.
Thank you. I would now like to hand the conference over to Mr. Arvind Bothra for the closing comments.
Thank you all for joining us on the call today. If you have any of your questions unanswered, please feel free to keep in touch with the investor relations team at ir@aurobindo.com. The transcript of this call will be uploaded on our website www.aurobindo.com in due course. Thank you and have a good day.
Thank you.
On behalf of Aurobindo Pharma Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.